Okay, we're looking good, we're feeling good. We are doing a recap of May 12th, 2026. It's Tuesday. It's a beautiful day. A lot happened. Big trending day. Let's take a look at it, see what happened. Tell the tape. Okay. So, what do we have? Let's do a little replay. I looked at it a little bit, but I didn't get a chance really to go into much detail. So let's take a look, see. Started about 6 o'clock. Whoa, look at that. All right. Looks like we're respecting the north side of this first presented fair value gap from London session. Not really much interest in some penetration, but not too much interest in. To be fair, after the pump definitely came down, looks like it was waiting for something to get down there. See that now. Okay. Let's progress. Without the penetration to go, what happens? Okay. Got some bullish order blocks created. These are interesting. Okay. Invalidated. Invalidated again. Comes down again to respect the London first presented fair value gap. 40. Balance. No. Breakaway gap. Oh, finally penetrate. And then we continue to the south side. I think this is a balanced price range down here. Come back up to the first presented fair value gap of London. Rejecting to the south side. Oh. Rejecting this balanced price range. Let me just confirm. Is that a balanced price range? Or is there a breakaway gap? It is a breakaway gap. Yes. Okay. Well, let's see what happens now. Okay. 8:30. Whoa, that was some news. Came all the way up here. Touched these bearish order blocks. Pop back down. Then what? It looks like we reject this breakaway gap pretty hard. Come back up here for over 100 points. Wow, that's pretty impressive for literally 8:30 news sweep. And then sweep Asia high. Sorry, it's Asia low. Okay, sweep. Well, it's not really much of a sweep, but reject Asia low. Come back down. So at this point, we're thinking we've got everything going up. We've got a ladder up. This is a difficult ladder date, considering yesterday we had this first presented fair value gap from London that we rejected. I actually got in here thinking we'd do the same thing. I should have seen how much liquidity we were able to get in pre-market below this first presented fair value gap to indicate to me that if we were to ascend the ladder, we definitely would have needed to come down to get something. I got in at the consequential encroachment of the first presented fair value gap, so I was white knuckling this for a bit down here. Luckily for me, I had the confidence of having two bullish order blocks plus an optimal trade entry zone in this area. And then I said there was this prior fair value gap it might respect. So I said, all right, I put my stop somewhere around here, 142, which means I had a 44-point stop, which is ridiculous and not something I normally like to do. But I really like this trade. So print the ladder. We immediately come down, test my order blocks pretty hard. This was a 1 minute order block and I guess a 5 minute order block. Test them really hard. Tap, tap. I was white knuckling it here. I said, if we invalidate this order block, I'm going to have a problem. I was in with 1 micro just testing, but honestly, I probably should have seen the rejection of the ladder, see it come down here, watch the candle structure, get in here, maybe, and then put a stop here under this. That would have been a much safer trade to do. That was absolutely doable. Getting in on the creation of this with a much smaller stop loss. Okay. Because if it got in, I had a pending here, which is quite the difference. I probably would not have felt comfortable doing that if I were trading the 5 micros that I like to trade instead of just the 1. So instead of putting in there, could have put one in here, but I don't know if I was that. Actually, would have been a really good idea. I'll have to think about that. Okay. Order block. All right, so what happens next? Actually, that's fine. And then we came back down. So we printed through the first percent of fair value gap. I thought we were sitting pretty. Then after I saw the inverse, I started to white knuckle it again. It came so close to touching my stop. Wow. But I didn't want to get out of it. I was really, really feeling it. And then I saw this and things started to turn around. I was really starting to feel more confident. We created a first presented fair value gap for this session on top of the first presented fair value gap from the prior session, both outside of the ladder or to the south side of the ladder, which is extremely concerning, but we were in profit. So honestly, I actually think I entered here. I do remember that. I entered here. Or maybe even here at this point, because the reality is I remember being up about 30 points prior going into which it sounds about right. But anyway, it rejected the 50%, so I started thinking, okay, we're definitely thinking bearish. This is coming around. This is definitely coming around. Even though it created the breakaway gap, wicked through it, so I said, you know what, let me hang in there. It came back down with authority. I started panicking again because I said, okay, if we rejected the 50 and we have these breakaway gaps here, there's a good chance that it's not going to give me what I need. Actually, I think I had gotten out by this point. I trailed my stop. I moved my stop from down here. Once I saw it doing, printing here, I moved my stop to just below the first presented fair value gap because I figured that was going to be a really strong area. But once I realized I was up about 100 points, I was up about 100 points. I moved my stop quite a lot closer. I think I put it somewhere around here. I think I got maybe 80 points out of this or something like that. 80, maybe 90. And then it came down and took me out. I'm pretty sure it was this wick that took me out. Let's see. And then it came down. Honestly, reading candle structure, you could see that curling plus the rejection of the 50 plus this strong bearish area would have been a good opportunity to go in for the reversal. Plus, you swept, London high. Perfect opportunity. You don't even really need to read highs and lows to understand that this is turning around. Honestly, this would have been a great idea to take profit here, 294. That would have been 100 106 points. That would have been an amazing trade, but I didn't see the London high, so I didn't see it, which is my fault, but that's what happens when you trade on your phone. So this would have been a great opportunity. Maybe get in somewhere around here for the short. And honestly, after this, you would not really have had to turn around for the rest of the day. Because you can see from here, it comes back and makes a high, but doesn't quite get all the way up here, rejecting the 25% area. It's extremely bearish to me. No reason to get out, even though you bounced off the first presented fair value gap, because excuse me, this alone is extremely bearish to me. If anything, if you were in here, you have a risk to reward. If it does, a very favorable risk to reward. The next opportunity for entry actually would have been right here, the rejection of this inverse fair. Is this inverse? No, I'm not even sure what this is. The rejection of this area right here, whatever it is, perfect opportunity to get in if you weren't already in. It's a nice short-term high, and because it basically plummets right as soon as this candle, right? So you got yourself a nice little breakaway fair value gap. This turns into an intermediate term high, so you expect this to not get broken. If you had a stop here, you'd move your stop. If you were in here, you could move your stop to basically here, and you're in profit definitely. And then you see if this turns into this is going to stay because it doesn't have a short-term high around it. Okay, so move your stop to about here, and you're definitely going to get taken out in profit if you can read that candle structure. Otherwise, if you get in here, because this would be a great opportunity to get in, you let that ride, create a short-term high. Let's see, what do you have here? Create another short-term high. You get a little concerned because it's starting to creep up this way. If you're in here, you're watching it, but see what happens, and it doesn't turn around. It turns around, doesn't get much higher. It respects this optimal trade entry area, so it's another opportunity to get in. Today was absolutely beautiful for the shorts. All you have to do, if you're here, you put your stop right here, because moving in the opposite direction, signaling that the break might be over or the run might be over. You let it fall. My goodness, if you got in here with great structure and everything, and you're just following it according to the structure, 274, and you're already up a lot. 274, you're up 300 points basically. Follow that. It keeps falling. Wait, hold on. What's going on here? It comes back up. You see this short-term high? It doesn't come up any higher. So I think we call this first, second, third distribution. You don't generally get more than that, but if you got in here, either way, if you got in here or here, your new stop will be here, because this should turn into an intermediate high. But let's see. We'll let it confirm. Yep, it turns into one. So you put your new stop here. You're guaranteed at least, if you got in here, 175. So you say 40 points in profit. Guaranteed by putting your stop here. If you got in around here, still 20, but still a good trade. Now let's see what happens here. You got yourself a new intermediate high. You move your high down here. This is so beautiful. So now you're, 300 points in profit from good reading of candle structure. You let it fall. It falls all morning. It's beautiful. You see it created an intermediate term high, but it was immediately inversed. You start thinking, maybe this run is up. Maybe it's time to get out of this run. Honestly, I would trail this pretty closely. Probably put my stop right around here. create an intermediate term high, which is music to my ears. So I'm already there. And it falls even further. You see what you have. You look for signs of a reversal. Create a new intermediate term high. I'll move my stop to right here. That's already 274. What did I say? 274? I can do math, I promise. Let's see. 274 to... Oh, that's because that's another 100 points. So now you're already at 274. So you're at almost 400 points in profit. And you get taken out. Now, because you created an intermediate, and because you created a new, because your short-term high is now higher than this prior intermediate term high, you're now thinking bullish. So I'd see if this can either come down to test this order block or test this. It probably won't come down again to test this fair value gap, but if I do, I'd see that as possible entries for the long, but I'd also keep in mind that this is a rather large stop loss, so probably wouldn't be too keen on that 867. But after the day I had, I might be willing to test the 60 point. It comes down, it tests this area, and actually it comes down here. Well, I'm thinking longs. Honestly, it creates, this would be a great scale-in opportunity for me, or DCA in is what I should say, if I had gotten in here. Otherwise, if it came down here, I would 100% take this. If I, let's see if we do this in real time, not real time per se, but just a little bit slower. See if there's another real entry opportunity. Let's see, comes down here, that bar. All right, comes down here. Okay, so here I'm thinking about getting in because it couldn't quite make it with that rejection. It's a very bullish candle considering the trend, considering the structure, and considering the fact that it rejected so hard this area. I'm definitely thinking here, get in here to 843, 30 point stop loss. Might be worth it. Might be worth it. I'd chance it. I would chance it. For the long, let's see what happens. Okay. Yep, I like it. Oh, okay. Oh, that's okay, and I'd be stopped out. Okay. All right. Well, we learn. All right. So we have a new intermediate term low. Okay. Oh. Okay. Well, that's going to create a new short term and probably intermediate term. Okay. All right. Well, still going down. All right. Okay. So I would have missed this, but I would have missed the bottom. Having said that, I'm seeing this breakaway gap form. I'm also seeing the test and rejection. This, to me, would signal a great buying opportunity. We created highs that surpass an intermediate term high. This is all the confluence that I need. Rejection, consequential encroachment, rejection, a new, oh yes, small term, short term highs in. Let's see. So I'm in here off of this rejection. Let's say 818, already up 100 points. Let it ride. Short term high, short term low, short term low. Short term low. First presented, print passed, no, rejected, which is concerning, but we have an intermediate term low now. Intermediate term low does not get eclipsed. We're still in this. We have a new one, so I move my stop from here to here in case. So yeah, we're in this. We're in this. 2 p.m. Speed this up a little bit. Move my stop up here. Move my stop up here. So we're already up off of this trade. We got in where? We said we got in here. 819. We're already up almost 200 points. And we're taking out. So we got, let's call that 150. 150 plus 400, so we would have made about 550 points on the day. Let's round that up. Oh, that's good. And honestly, at this point, we are done. We probably wouldn't even have stuck around for this trade too, but you know, let's see. Let's just see how the day ends. 230. Intermediate term high, intermediate term low. It's still trending. Could definitely get back in this. Let's see, just for grins, where would have been a good opportunity to re-enter this trade after being stopped out? Short-term low. So now I'm thinking bearish, but short-term low. Okay, so I would wait for, honestly, if I saw that, maybe. No, I don't think so. Okay, you know what? Yes, because I see this intermediate term high. No, it doesn't eclipse that one, which is close. So I wouldn't have been in yet. Oh, we're absolutely bullish. 315. I'm looking for another opportunity. Looking for a pullback. Okay. Maybe here. Decent entry. So let's call that 24. Take that to the first presented for value gap. I think that was from London session. Oh, because this was a superimposed London session on a New York session, 9:30 a.m. session. So we did still end up getting about 40 points out of this trade because you'd pretty much have to close this out at 4 anyway. So we're done anyway. You should, if you're this close, you just basically close this out. I mean, there's no point, especially if there falls. Yeah, get out of this trade. So, actually, I think made it to almost 50 points. So yeah, and today was an absolutely beautiful day. You could literally trade all day and make money in each way. Thank you.